on, everybody? Welcome back, if so, to another market update video here at Benefit Central. I'm Benjamin, and today Bitcoin in the S&P charts. But before I get right into the market, please leave a like, drop a comment, and if you could subscribe, I'd greatly appreciate it. Everybody, the markets are sort of going how we would like them to. I did mention a while back that we were going to get a breather, or a few days ago, even yesterday. I mentioned that we were going to get a breather and a pullback from our resistances at around 2,000 for Ethereum and 25K for Bitcoin. However, diving in and looking at the charts, you can tell that we are getting not necessarily more of a pullback, but a lot of people did seem to get a little nervous just because we ended up retracing back to around that 18, a little below the 1900 level. I myself would have liked to see that we stayed above it, but that's totally fine. I told you worst case scenario was 1750 as of right now, but as the days continue, the indicator continues to rise up with the stock. It tries to catch up to it. So our 20 moving average right now, the lowest case that we can see right now is 1775. Before we end up having the bulls try to attempt to kick us back in and see whether or not we are going to try to reverse this trend. But as of right now, I mean, realistically, all we were waiting for was us to end this breather or this retracement. However, we are getting to that tipping point as of right now for Bitcoin and Ethereum, and for most of the market, to be honest. Just because of the channel that we've made, it's our ascending channel. Obviously bullish, broken after our triple bottom and double bottom for most. But like I said, we're coming in contact with resistance right now, as well as our 200 moving average. So there is definitely some resistance approaching us, as well as resistance we already approached. So as of right now, we are definitely waiting for the bulls to come back in, kick us back in. It seems like they've done fairly good enough, if I say so myself, just because I've been live and I've been watching it throughout the days. In the past few days, honestly, we've kept a very healthy retracement, haven't retraced too far. Honestly, our pump was huge compared to what we just retraced from. Even our pump now, this would almost technically be 50%. 50% would technically be a healthy pump, and it would mean that we are going to continue bullish. However, it realistically depends on how this day closes. It is 120 as of right now, and we will get that. Sorry about that, guys. I'm trying to show you guys an example. But we will get that daily close around 5 to 6, and then that's when we'll have to see what we end up doing. But as you can tell right here, around with the Fibonacci retracement, 50% as of right now is realistically where we tapped. From our pump, from our RBI, from touching the 20 moving average, our indicator, 50% retracement is exactly around 1817, or around where we realistically are at right now. With our next daily that opens, I do expect that we at least form some kind of wick downward. It's only healthy. Every candle almost has it, unless it's an extremely bullish candle, which I don't think so. But our next daily candle, we should probably get a wick down. That's why everyone will probably say, I told you so, I told you so. You really didn't say anything. And unless you shorted 2,000 and shorted 25K, then you can say something. But otherwise, it's been a gamble ever since. They've been fighting for it. At any point, it could have reversed bullish, and you would have been screwed. So honestly, I've watched it come back down. I was going to short 2K and 25K for Bitcoin and Ethereum, just because of how overbought we were and how great that pump was. But unfortunately, I just didn't have enough confidence because of the trend. We ended up trending bullish, so I just didn't want to go against the trend. You can really hurt yourself doing that. But the overall trend is still technically bearish, because we are still in this descending channel. And I will show you guys that. But looking at the Fibonacci just real quick again, it is at 50%. So as of right now, everything is healthy. There is no worry. There's no to worry about anything. Realistically, it's very healthy. Today we will get a decision though, whether it's later on in the nights, whether it's as soon as the daily opens. It realistically, or maybe we don't even get the new daily. Maybe this candle kicks in some volume before we even know it, and it just does what it needs to do. But realistically, it's all about how today is closing and showing us direction and what we're going for. I love how we've held. We haven't closed below our other wick. Technically shorting, just to teach you guys just real quick, if for those of you that don't know, if you were to short a whole number, price action and being overbought on the RSI, you short it, your next TP usually is a wick or a half number, any kind of resistance. And then if you really wanted to hold it, you really would hold this all the way down until either the close or the wick of this candle right here. You're looking to the left for shorting, but obviously, well, you do for the buying too, but you get my point. Right here is TPs. These are all TPs all the way down, and if it's extremely that bullish, then your next TP and close is around here. I don't see that happening though. The worst case I saw was around 1830. Like I said, the very worst case was 1750 if we were to get a lot of bearish momentum back in, just because I know how we have been trading, and especially with us coming in contact with some resistance like this, as well as almost the top of our descending channel. So I just didn't know how far the bears would push us down, but as of right now, the bulls have fought pretty well, and we're continuing to push. So I have no worries as of yet. Finding great support at around 1850, honestly, where that 50% was. So it's not too bad, honestly. If we end up breaking that, then that will be concerning. But I will not be longing until I see what this 20 or shorting won't do anything realistically until I see how everything reacts. We made great profits last week. There's no reason to rush into the market. That's what a lot of people end up doing wrong about this, is they obviously you need money. Everybody needs money, but you need to treat this like a job as well. If you go and work a 9 to 5, you have to sleep for 8 hours. It's just how this goes. So with this, you kind of have the more luxury. You can choose whenever you want, but you still have timing that you have to be responsible for. If you're in the market 24/7, you're not going to make money, because you're going to freak out. You're going to lose, you're going to gain, you're going to lose. Might as well invest at that point. You might as well just buy the coin. It's that simple, because then you can just hold. Definitely with trading though, definitely with trading in the way that everybody does these things, I wouldn't just get too happy with stuff. Like, I saw the chats and I saw people, I try to help people, and they emotionally are so attached to trading. That is exactly what you're not supposed to do. You cannot get emotionally. Sure, I love Ethereum. Sure, I love Shiba. Sure, I love these ideas. Love them. But I can't be emotionally attached to them while I'm trading. Otherwise, you will lose. You will lose. Let's say the media says, oh, it's pumping, we have a wallet, or You're like, good, I love Shiba. Oh my God, we got a wallet. Yes. And you're so addicted to it. You jump into it with a long. But news wasn't good, because let's say the app, shreds stuff or whatever, and it has an inverse effect, or you never know. And then you end up losing money that was totally based off emotion, and you didn't even look at the candles, the charts, the indicators. You didn't look at anything. You didn't look at volume. All you did was hear a piece of media and emotionally got influenced to buy. It's totally incorrect. With even investments, real quick before I dive further into the charts, just since we're on this topic. With investing, the new way of investing realistically, I believe heavy in, is you invest in cycles or quarters, realistically, obviously cycles, but or events. So let's say I had 10 grand to invest with, I would go and invest it on a low quarterly, or at least a quarterly that I understood that has room to make profits, and then I would sell the next quarter. That's just how investment should. It should not be where you just give the government or whatever corporation all your money and you just let it sit there until you get rich. That's not how you get rich, or even build wealth. Back then, they had different rules, and unfortunately, things are changing. You have to really defend yourself nowadays. So realistically, I would constantly have my money moving around, constantly going from place to place, because if I keep it in a bank, it's not going to do anything for me. If in fact they'll use my money, and in fact they could freeze my money, and in fact they could say that it's no longer mine. So I just don't. I would hold any kind of asset you want to do for wealth and material like gold, silver, or copper. Those are good just to hold wealth. It doesn't move too great in percentages, obviously, forward. I think gold had maybe a 5 to 7% in the last 10-year gain, but you don't lose money. You don't lose on gold. So it's a safety. They're trying to create safety coins and all of that for the crypto world, so that'll be also interesting. But off of that topic, I'll jump into that in another video. I've taken your guys' time enough for that. But jumping into Ethereum on the weekly, you can see how we are reacting to our 20 moving average, like I said in the last video. Nothing too crazy as of yet. 50% retrace. Nothing's too crazy. We can still reverse. It's the weekly. It's Tuesday. If anything, we could just be forming our wicks, like I said, 50% healthy, and then a continue back. However, looking at our monthly, we're still battling this resistance, like I said, and still have potential room to make that GBI. So everything is, and we're still in this descending channel, like I said. So we still have a lot of room to do realistically both. The only thing that is influencing the bullish momentum as of right now is we haven't tapped the top of our descending channel. If this was at the top of this descending channel right now, I would tell everybody to stay away from it, or at least wait for the break. But as of right now, we are kind of in a similar position just because we are under resistance. And honestly, the next few days can honestly cripple or make the crypto market just because of the patterns that we have set up. and the patterns were in, like our descending channel. So other than that, realistically guys, I am just waiting, and I will keep you guys updated on the crypto market and for our cryptos. But diving into Bitcoin, it's a very similar situation obviously, but they're tweaked a little bit different. Obviously a great pullback, everything's doing fine off of that 25k that we tried to spike through. Obviously we knew it was going to, but this is a daily, obviously off of our triple bottom and our break above the neckline, doing phenomenally well. However, looking into the monthly, just to show you guys, we do still have that very potential bear 180 that can kick in, and I'm not really too big of a fan for that, but it is very possible. It's very possible, and I would just definitely keep an eye on that. However, looking at the daily, or not the daily, the weekly, sorry guys, our RBI was successful. However, most likely we might end up coming back down to test some support, and I mean that's around 2300 flat, which is honestly reasonable. We pumped 2000 to 25k, and then we could come back and just reset. However, I don't understand why we would need that. Our RSI is already oversold, so we could be putting in our wicks right now and then getting ready to reverse. However, that resistance at 25k is pretty strong, and honestly we are getting squeezed right here with our 200 EMA and then our 20 moving average coming as well, and the resistance. So there is a squeeze that is either about to happen, bullish or bearish, for most cryptos right now. So like I said, just please keep an eye on it. Do not enter anything right now because it is very risky and it makes no sense. Sure, I mean a broken clock is, what is this saying, is right twice a day or something like that. Sure, you can long this and maybe you'll make money. Sure, you can short this, maybe you'll make money, but the point is being guaranteed money and being consistent and having less losses than your wins. That is how you get successful in this, and this is how you maintain an actual business in this. If you do not do these things and you can't stay disciplined, you will lose your money and you'll go back to your 9 to 5 and you'll go back to doing that. You'll go back to having to try to just look at the charts and trying to understand and try to get this going and then working for somebody else. The whole point of us trying to do the whole entrepreneurship, the whole point of trying to understand the market and day trading realistically is to get your freedom back and try to avoid the 9 to 5. The 9 to 5 is realistically there to just support you. I've worked several 9 to 5s while I traded in the very beginning, while I was learning, and there's nothing wrong with that. You just have to do what you need to do to get it done. There was no one to teach me. So realistically, just focus in, stay disciplined, treat this as a 9 to 5. Your 9 to 5 has rules. You got to get there, clock in at a certain time. Treat this like a 9 to 5. You got to be there and be responsible and be there at a certain time. Be responsible, be disciplined, and I promise you will have the best, and as well as consistency, you will have the best time trading. You will have the least amount of stress than everyone does. I relax and everybody's freaking out about emotions and stuff like that because we've had 3 red candles that aren't even strong, that haven't moved us anywhere. Calm down and read the charts. But other than that, everybody, I'm going to show you XRP before I head out. And it's very, very similar. Honestly, all of them are correlating very, very similar. Except XRP has just been a bit weaker, in my opinion, and I don't like the way it's trading. So I've left it alone. However, we've seen extreme volatility with XRP. I mean, extreme volatility. So I'm definitely not going to miss another move. This is a descending channel, almost a descending triangle. And I've seen a few of these pop extremely aggressively. I mean, we've seen one here, but this was like more after. We should have seen another pop or something here. But we died out with I believe it was the SEC and the Fed lawsuit that they've had for years, honestly. But now looking in right here, you can see that we're getting the same pump and then almost the same kind of trend. However, it's a bit healthier just because we've been attempting to try to get above the descending channel. However, testing it as many times, it makes it weaker. So I like this one. The one back here, it died out. But right here, I do like this one just because we are testing this several times, and then now we're testing it once again, hopefully for some bullish momentum. However, we can get rejected off our 20 and our 200 moving average, and it would continue this descending channel and possibly break us lower. However, the low side is extreme, while the upside obviously has a way more benefit. However, you don't want to get burned in this. This is why I say please just wait for the break, because we have a few more days realistically for XRP, because it just has a bigger downtrend. But realistically for the rest of the cryptos, it's today or tomorrow. Like within this week, we are going to see a definite break or pump. Like it's that simple, at least from the graph side. We do have a major event Wednesday for Ethereum and for some of the crypto market as well, so that will be interesting to watch. However, I know today's a longer video, but diving into the S&P just real quick to show you guys, because I believe we did hit 43. Yep, we hit 4,300 right now. No hesitation, did not want to stop. So it's very interesting that the crypto market did fall. But honestly, amazing. Honestly, it's great. The S&P 500 has continued its bullish momentum past 4188, as you see our line. And honestly, we could just expect a bit of rejection. If it doesn't want to reject and it wants to continue bullish, by all means, it will do so. But as of right now, honestly, I believe that either if we don't get rejected here, we will get rejected off of our descending channel. And if we don't, then we are going back to our bullish momentum. Excuse me for the camera, but we are going back to our bullish momentum and what we need to get done for the markets realistically, because if we continue, we most likely will consolidate outside of it and then continue this bullish trend. So realistically, it depends on how we want to close. Remember, we are extremely overbought right now for the S&P 500. So getting above this would necessarily mean that we are not manipulating, but squeezing and doing the most to try to get that above there. But other than that, everybody, that was just another quick market update video for you guys, and I'll catch you guys in the next one. Ciao.